Unnikrishnan, the Managing Director at Thermax, now joins in. Good afternoon and thanks so much for joining in. The street is really pinning for some sort of a recovery in the second half of, this FY16 because the earnings growth has not been good in the Jan to March quarter. So we're now looking forward to Q3 and Q4 of this year. You've indicated in your, various interactions that while the small orders have been coming through, the large power sector orders, you've not seen any of those, and if they happen, they'll only happen in H2. What gives you the confidence about this recovery in the second half?
Well, if the consumption were to start picking up, then the current capacities will get utilized. And normally for the larger ticket size projects, the gestation period from the date of ordering for the completion of the project could be anywhere from 3 to 4 years. So any capital goods order placed for a cement or a steel or a power equipment will be coming into being a commercial entity or which can produce results will only be 3 to 4 years down the line, which means what you order in the current year will be an effective equipment to produce in year 2019-20 or 18-19. So by the time the consumption should be coming to a level where capacity utilization should be peaking. So that is my expectation. But let me clarify something, Rema. I don't think we are expecting a quick recovery in the second half for the larger projects also. You may find sporadic orders getting concluded in power. We are already seeing some inquiries coming out from the power sector, especially the NTPC, the couple of state enterprises. We have information sufficiently clear that there will be tendering happening, and possibly the ordering out in the current year is going to be better than the previous year. That's the current level of information.
Hi, Mr. Unnikrishnan. Thanks very much for joining in. Sir, this time around when, BHEL posted numbers, one of the problems that, in the order inflows that came out was the delay in bidding by state governments. Is that a relevant risk that's beginning to play out now, you think?
Yes. Private power producers are not in a healthy condition to be adding capacity. They are all having stretched and stressed balance sheets, let me say that both ways. The healthier ones are the central government organizations like NTPC, which I am expecting will continue to be ordering. Their ordering is going to be starting. But the state governments have not gotten their debt restructured, and unless otherwise there is a tariff increase which will make the power production, transmission and distribution a profitable venture, I don't think they'll be able to be getting the funding from anybody. The government is not going to be funding. The banks have to be funding the debt portion, which is a major portion for a power side. So barring 2 or 3 states which I do believe have the ability to be setting in new power plants, other states have to take political action related to increasing the tariff where they'll be able to restructure the debt and come into that. So it's going to be playing another major issue. And it is pure, in my opinion, it's going to be a little more difficult issue because at this juncture, in this peak of the summer, there is approximately 240,000 megawatt of capacity in the country which can produce electricity, and the real usage is only 134,000 megawatt. Does it mean that there is no demand in the country? Sorry. What the state electricity boards are doing is they are giving power to the cities and depriving the rural area of this country of power just by blocking and increasing the power load shedding and power cut. Average power cut in the country may be currently not less than maybe 6 to 7 hours in the rural area. So that is the issue which they are going to be resolving before it becoming a social issue.
Okay. You indicated in your first answer that, when consumption picks up, you will see an improvement in capacity utilization. In April, when we'd spoken to you, you indicated, I think the capacity utilization of Thermax was at 65-66% thereabout. Has it improved in the first 2 months of this fiscal year? Where do you see it in FY16?
Certainly no, because my carried forward orders, which are gotten into the current year, is comparatively lower than the previous year. So the utilization is possibly remaining almost at the same level or marginally lower. Unless fresh orders come, we will not be able to increase our own capacity utilization, and which should take a little longer period of time.
Sir, just another question that I want to ask you, which is quite topical actually these days, is that a lot of the highly leveraged companies have been getting punished, by the market. Some of these might be consumers of Thermax. Are you really seeing companies or clients which are actually pushing payments? Is that a real risk that a company like yours might be seeing?
Well, there are always some customers who have a habit of delaying payments. But if you really ask me, in the last 1 year, we have been able to improve our overall working capital position. In fact, it has come down. Despite an increase in the top line, we have been able to manage it with a lower quantum of money to do that, which means I had been getting customers' payment on time. Now, is it that something we have done wonders, or is it because they are paying? It's a combination of both. And if you look at 2-3 other larger companies, barring one very large company in the capital goods sector, everybody had been able to be improving their overall financial position. Though the top line wouldn't have improved, the profitability could have been in difficulty, but working capital improvement is there. So that is an overall indicator that despite the customers getting punished by the market on the share market, their balance sheets are becoming stronger and they are paying. But only thing is, there is no frenzy of execution of contracts, of the orders on hand. There is no pressure on people like us that we want to advance execution of the project. Everybody goes at an ordinary pace, and as there's no hurry to execute projects. That's the reality in India right now.
Okay, so recovery is perhaps ambling on. So let's talk a bit about your own company. In the various segments that you operate, so the big one is of course boilers, heaters, chillers as well as the power segment. So that roughly contributes about 60 to 65% to your revenues. How is FY16 looking compared to FY15? As well as then if you could help us with in the services, chemical as well as in the environment businesses. In all these four, if you could tell us, will FY16 be better compared to FY15?
Let me start on with the positives. We should do better in the environment segment in the current year on account of the orders on hand and also better implementation of the pollution regulations under the new regime. I don't think companies can get scot-free by polluting the environment anymore. I can see a lot more of activity in the enforcement of environmental regulation in the country in the last 1 year. So I'm expecting environment segment of the company to be doing better in the current year. Services sector will certainly be growing in the current year, but not in a very large percentage. Maybe I would expect it to be growing at the rate of 10%. Then comes the core areas that you mentioned about our boilers, heaters, which are the energy segment, which I would divide into three. The heating, cooling and the power. Both heating and cooling will grow, but the power segment, where I'm supplying equipments for the captive power and the main power area, I do not expect a growth in the current year. So if I had to concise it in overall, barring the power segment, which is getting into captive power for cement, steel and heavy chemicals and non-ferrous metallurgy, and the IPP-oriented the main power plants, I am not expecting any growth in the current year. Other areas, all other areas of the company will be growing. Now, will I be able to compensate with the growth in so many of the smaller businesses with the largest chunk of the business to make a growth in the current year? You will have to give me time without me giving a guidance for the year.
All right, so we'll leave it at that for the moment. Thanks very much as always for joining in.